Welcome to the SNN.Network Canada virtual event. I'd like to introduce our next presenter, Ernst Lubscher, CFO of Greenbrook TMS. Ernst, the floor is yours.
Thank you, Kate. And I welcome everyone to the presentation of Greenbrook TMS. As was said, my name is Ernst Lubscher. I'm the Chief Financial Officer of Greenbrook TMS and look forward to sharing the story with you. Moving on to a few key highlights of the business, the company at a glance. We were founded in 2011, and we are the leading U.S. provider of transcranial magnetic stimulation therapy for the treatment of depression. TMS, or better known as TMS, is an FDA non-invasive therapy for the treatment of major depressive disorders and more recently obsessive compulsive disorders, OCD. TMS is eligible for reimbursement in all 50 states from all major insurers, so it's a reimbursable benefit, which makes it an attractive prospect for patients. A couple of key highlights of the business. We're currently operating through 148 centers across 17 states in the U.S. We've done over 20,000 patients, treated over 20,000 patients with more than 730,000 treatments to date. We're closing in on that magic million number, and we by far the largest data set of treatments in the U.S. As of September, we had cash on hand of $26.1 million. We've shown 5% year-over-year growth in our center network, although as of September, but we've subsequently acquired a business which added another 17 locations, bringing us to the 148 that I previously mentioned. Revenue in the last quarter increased 9% year-over-year. That was a little bit slower than our year-to-date growth rate of 15%, and we expect to end the year with about 20% growth rate. It's been a challenging environment over the last two years, but we've demonstrated the ability to grow and operate through COVID. Some of the key investment characteristics, if we look at our business. We are a fast-growing leading provider of TMS, a new treatment modality for depression. We've grown more than 50% annual average since 2015. We really serve a significantly underserved market opportunity. As many may know, currently 51% of treated patients in the U.S. fail first-line drug treatment therapy. That leaves a population of approximately 5.3 million patients that is untreated and has very little treatment opportunity until TMS came. And I'll talk more about that later in the presentation. The science has been validated. All major U.S. commercial payers cover this treatment, which makes it more accessible for patients. It's safe and effective for treatment, very little side effects, and it has a 62% response rate and a 49% versus a 49% response rate of drug therapy. So better than drugs without the side effects. We also have a highly experienced management team. The founders of this business and my CEO, Bill Leonard, was instrumental in building TLC Vision Corporation from a single location to over 300 sites across the U.S. So we've been there and done this before. Moving into kind of the addressable market, I think it's important to know, as everyone knows, you can't turn on the TV without hearing about depression or mental health. On top of that, the stigma of mental health has gone away to a large extent, with athletes like Simone Biles speaking out about the disease, and Michael Phelps. So the stigma is releasing and the market is growing. Awareness of mental health is growing. And then once again, 51% of patients fail drug treatment, which leaves a huge population of patients that has very few treatment alternatives. And TMS fills that very well-defined and needed gap. Today, we estimate there's around 5.3 million patients that failed drug therapy and meets the criteria to get TMS therapy. So looking at what is TMS therapy, and obviously I'm not a physician, but I'll give you in layman's terms. It's magnetic pulses that is aimed at the lower prefrontal cortex of the brain that controls mood and sleep and pain. Those magnetic pulses stimulates the neurons to start firing again and opens up the neural pathways to function as they normally would. You do this for 30 to 36 treatments, and you're essentially retraining the brain to function normally, as opposed to drug-induced attempts to do pretty much the same thing. So it's a non-invasive, non-drug alternative with highly efficacious outcomes. And in layman's term, it's essentially PT for the brain, retraining the brain to operate normally through magnetic stimulation. In terms of what does a patient go through at our location, we're in Class A space. We're not in medical facilities. That's important for us because you look at the profile of the typical mental health patient. They want a discrete experience. They don't want the stress associated with a hospital environment. A patient spends about half an hour at the location 5 days a week for 36 treatments. And post-treatment, the patient can drive themselves to and from the treatment. It's non-sedative, non-invasive, no anesthesia, no hospitalization. And if you put that against kind of the side effect profile of a drug treatment, in drug treatment you get things like anxiety, blurred vision, weight gain, loss of sexual appetite, where TMS is extremely well tolerated and therefore a very attractive treatment methodology for a large, as I pointed out, a large underserved market. So what's the key opportunities, growth drivers for us? As I mentioned, the growing awareness of depression and the reduced stigma around the world. You can't turn on the TV without having some sort of exposure to mental health. It's a global problem and it's not going away. With COVID-19, we've also seen the CDC has published results that about 40% of adults struggle with some sort of mental ailment following the pandemic. So the problem is only getting bigger. And then paired with that, you've got a growing acceptance of TMS as effective second-line therapy. It's safe and effective, which makes it more attractive. And then why bring this through a center-based delivery model as we've done? There's been really poor alignment with the traditional practice of psychiatry. Psychiatrists are not typically used to device-type treatments, more medication management and talk therapy, and their offices aren't really equipped to have this high throughput type of treatment. So we saw the opportunity to bring a better service channel to TMS and make it more accessible to a wider range of patients. Pair that with a fragmented competitive landscape. There's about 2,500 devices out there, and 90% of them are in individual psychiatric offices, and that does not it's not been effective in the psychiatric office. The utilization is low because of the constraints that I just mentioned. If you look at Greenbrook, our business model, we look at three core buckets in terms of how do we get a patient, how do we convert a patient, and the treatment delivery. If you look at our patient inquiry side, we do a lot of direct-to-consumer markets, so patients can self-referred and can be it can be RX by physicians within our network. We also have a pharma-type rep force that goes out into the community to therapists, behavioral health clinics to make them aware of TMS and our offering. And we can essentially serve as an extension of their practice to give additional treatment options to patients that fail drug treatment and talk therapy. If you look at the conversion process, we've got expert-trained patient consultants that meet with the patient, take them through the insurance hurdles to get approval to get the treatment done. We also have highly reputable physicians that do consultations to make sure they're medically eligible to receive TMS therapy. And we have a centralized booking and scheduling system that allows patients to go to accessible locations. And I'll speak a little bit more about that, how we've designed our footprint to make this very accessible to the patient. If you look at treatment delivery, once again, I spoke a little bit about the location where treatment delivery takes place. It's Class A real estate with doctors, technicians, and expertly trained staff that takes care of the patient. And our patients' feedback is they really enjoy the experience and the interaction with our technicians. So we make it a very pleasant experience. And that has proved out to be the case with a very low dropout rate, despite the fact that they have to come every day for 4 to 6 weeks. We overlay a centralized scalable business infrastructure, including IT, billing, HR, branding, training, regulatory, and finance. And that makes new regions and new centers plug and play. And we take all of the headache of delivering this treatment modality away from our physician partners. Looking at our current footprint, so like I said, 148 centers spanning 70 states. A couple of things that stand out here. Commonly asked question is, how do we decide to go into a region? There's 3 key things that we need to establish a new region. You need a base population density, you need high quality management and staff, and you need a physician network, both on the provider side and the referring side. So, and on top of that, we evaluate local reimbursement rates to make sure that it's a favorable jurisdiction to go into. And we've grown both organically by adding de novo centers, and have made 2 acquisitions. One, our West Coast platform in Alaska was developed through acquisition, and we recently acquired Achieve East in New England for the natural northern expansion from our footprint. Another important thing, if you see the bubble on the right there, you see a fairly dense distribution of centers, and that really speaks to leveraging regional resources and making accessibility easy for patients, which is very important or critical, essentially, in the daily nature of the treatment. Moving on to our key operating metrics and how we've performed over the past few years. So what are our key operating metrics that we look at? The number of TMS centers that we have in play, and we've managed to grow that pretty aggressively over the past few years, with a little bit of tapering in growth as COVID-19 came about. The number of new patient starts that we can push through that network of centers, and then the direct revenue driver, which is the number of TMS treatments. And as I mentioned, we do about 35 treatments per patient, and that's built individually to drive revenue. So how does this translate to our revenue profile? If you look at the slide on the left-hand side, you can see robust growth on the revenue side as well, with the exception of a few quarters that were heavily impacted by COVID. And we remain bullish on kind of continued future growth. If you do look to the right-hand side, a very important factor is also that all our centers aren't fully ramped at the moment. We've got capacity in our network. We've got about 40% of our centers that's younger than 2 years, and we aim to scale a center over a 4-year period. So just if we had to do nothing else, we see a lot of growth still in our network, and then we're going to support that growth by layering on additional TMS centers, additional regions. Also, OCD has been recently approved, so there's additional indications for TMS. That is also a growth bucket for us. And then obviously M&A activity, and lastly, an addition of other treatment modalities, which I'll speak to in a little bit more detail on the next slide. So what does development look like? In region development, we still have a few regions that we can add density, and density means we can leverage regional resources better and enhance margins. And those newer regions are Austin, California, Alaska, Massachusetts, Florida, Michigan, a lot of Oregon and Iowa, a lot of states that we can still add density and grow those regions and leverage those cost structures. M&A activity, we've done 2 successful acquisitions on the West Coast and more recently in New England, and then new TMS indications. TMS started as being indicated for more major depressive disorders. Now it's also indicated for FDA approved for OCD, and we're starting to see reimbursement on the OCD side as well, which will drive future growth. Once again, we don't have to change our center setup. We can just seamlessly integrate those additional treatment modalities into our locations. And then more recently, a very big opportunity for us is also Spravato. Spravato is a nasal esketamine, which needs to be administered in front of a physician, and you have to be observed for a period after that. So that has the same constraints for individual psychiatrists and fits nicely into kind of our clinic setup, the same doctors, and we can use the technicians for the observation period. So an exciting additional revenue lever that we have there for future growth. Looking at our cap table, important to note, not a lot of dilutive securities. Cash on hand in September at 26.1 million, and to the right, some supportive shareholders in 1315 Capital and Master Special Situations Funds and affiliates, the founding shareholder Greenbrook Health, and then strong insider holding in terms of directors and officers as well. So incentives are aligned, and we've got a strong and supportive shareholder base, which also will continue to support our future growth plans. Well, thank you everyone. It's been a pleasure presenting. With that, I will now take questions. So the first question I have is, can you talk about the revenue mix between Medicare and private insurance? So we are about 85% on the commercial side and about 15% on the Medicare side. There's in certain states a little bit of a higher reimbursement on the commercial side. So and as I said, all major commercial insurance carriers cover it. So and we've seen positive trends in reimbursement as well. One being able to negotiate higher insurance reimbursement rates, and also kind of loosen criteria to make it more accessible for folks. Where do you hope to see the company in 2 to 3 years? I think what we have as a platform and is a platform company. We've got a very unique mental health platform service delivery model. And we want to be the go-to place if you fail drug therapy. We're not trying to compete against big pharma. We're not going to compete against a generic Zoloft, which is a very low cost. But as I mentioned, that fails more than 50% of the time. So we want to be the go-to place if you fail drug therapy to offer that patient an option without having to go to extremes such as ECT, which is an ineffective but highly invasive treatment. So that's where I see the company, a national company, additional density in existing regions, and expansion nationally across the U.S., and being a unique service delivery platform for mental health. Another question, how many rounds of meds does the patient have to fail before being prescribed CMS therapy? And has that number changed? That's a really good question. So when we started the business back in 2011, there were no insurance reimbursements. Fast forward to 2013, we started to see reimbursement. 2017, you essentially had the full population of reimbursement. But at that time, you had the criteria typically had 4 or 5 medications that you had to fail. That has come down to as low as 2 or 1 in certain instances. So we've seen positive momentum to make this therapy more accessible to folks, and an earlier intervention, which will also drive growth in the future. How do your centers cater to the patients? I mean, I think if I'm understanding the question correctly, we make sure that we have a discrete spa-like environment where a patient is extremely comfortable. And that's why, as I mentioned, our centers are not in the hospital space, not in medical space. You'll see us next to law firms or financial services firms. And it's a very warm and welcome experience. We're very focused on that, and also catering to the patient from a geographical standpoint. Because it's a daily treatment, we want to go to our patient and access patient populations. That patient can come to our center close to their home or close to their place of work. And that's the core differentiating factor. One of the core differentiating factors that we have is that versus an individual psychiatrist, we've got multiple centers in a jurisdiction, easy, accessible locations. You can go to any location whenever you want, close to your place of work or close to your home, and you have a warm and welcome experience that's geared towards delivering TMS or services for treatment-resistant depression. Another question coming through: how should investors think about your capital market strategies with future M&A and capital raises? So one of our core strategic focus at the moment is we've proved that we can replicate our model and we can grow even through a pandemic. Today, what we want to do in the future is balance capital use in terms of developing new centers and increasing throughput and volume at existing centers. We have publicly said we want to grow to be a self-sufficient company by the end of 2022. Having said that, we opportunistically would still look at M&A opportunities. And like I said, we've got a supportive shareholder base if we had to fund those. But I think the main focus now is balancing expansion with additional throughput from existing centers to drive to self-sufficiency from a cash flow perspective, and then opportunistically looking at M&A opportunities. Please discuss success rates for worst cases. I'm not 100% sure I understand the question. So if success rates, if that's defined as kind of responses or remission for patients, we've got about a 62% response rate and a 40% remission rate. I mean, so that holds fairly consistently. And if you compare that side by side to medication, that is a much higher success rate or response rate than medication. Very important is there was a STAR-D study that showed the more different medications you try with every cycle, there's less of a chance that you would succeed with medication. And it goes down to, if you've tried 4 or 5 cycles of medication, as low as 6% that you'll have success with the next one. So, and in that we get patients, our average patients have probably failed about 4 or 5 courses of medication, and we still see remission and response rates of 62% and 40% respectively. With that, I don't see any more questions in the queue. Yeah, I see another. Are all our locations company owned? Yes, that we don't run a franchise model. We own the majority of all of the locations. In certain cases, probably about 30 to 40% of our footprint will have a minority ownership of a local physician, an influential physician with a reputation in the local market. And why do we do that? Obviously to make sure that the physician is invested in delivering the best care and upholding the reputation of Greenbrook. So we own the majority of all of our locations, with the exception of some minority shareholding in certain locations. Effectively, we own north of 80% of the equity units in all our locations. So I think that is it for questions. Thank you so much for joining the presentation and for all the insightful questions. And on the presentation, as I said, if you have any follow-up questions or want to get in touch with management, please feel free to reach out to investor relations at greenbrooktms.com. And I look forward to speaking to you again soon. Thank you so much.